these relative equal highs. What makes a high probability or a good candidate for it to be rated? Because the right-hand side low is slightly lower than that one. So they're relative equal. Buy side's resting above that. Market's going to rip up there, go into that premium inefficiency from the daily chart, run out everybody, and then this is the secret sauce you're looking for. Okay, why did I do this today? What was I doing? Well, first of all, it was the run to this. See that high? This candlestick right there, 9:48 a.m. That high has a lower high to the left of it, and it has a lower high to the right of it. So what does that make that? It's a swing high. Oh, but that's not a swing high because I don't care about what you listen to, who you listen to, who you subscribe to. I don't care. They didn't short the high. I did. So the point is, this short-term high here, when it gets pierced like that and it goes into a premium array that I'm aiming for and waiting for, I want to see it then break down. This right here, that swing low being taken out, that sets the stage for this being model 2022. I don't know what's going on around the internet, but people were sending me emails, okay, saying, hey, look, did they change the algorithm because model 2022 doesn't work anymore? Man, every day I'm using that, every single day. It's there every day. It's there every day, multiple times on lower time frames. I don't know what you're looking for, but if you can't see it, go back and watch that lecture series again because you don't know what you're doing yet. You can learn it, but you're trying to rush by watching a couple things, no back testing, and you just want to try to find it in the future without having done any real back work of back testing. So that fair value gap right there, let's add it to the chart. I'm not sure why. I'm not even sure why it's not there anymore. It should have been there. I don't know. I gotta check my eyes here. This old high here, because it was a means to an end on the run up, all it's doing is algorithmically referring back to that same level there, getting that last little bit of liquidity because it only spends so much time here and then it runs away. And you ever watch the market and say, okay, I'm going to go in here and I'm going to put an order in, and then it just completely leaves the range that you were trying to enter in? Well, what are you left to do? Either chase it or put an order back in there and see if you can get another stab at it. Well, that's exactly what the algorithm is doing right here. That's all it's doing. That little bit of a wick in there like that. This is all permissible price action. And I teach that as a mohawk, okay? And I'm going to give the descriptions as to why I call it that, but you all know that's been around for a while. You know why I named it that. But the bodies are staying inside there. So what is that telling me? I know I'm right. See, ICT is going to mess you up because he's trying to teach you to focus on being right. Well, let me tell you something. What do you think your winning trade is supposed to be about? Being right. So we're arguing semantics here, okay? The bottom line is the market's staying inside this fair value gap, indicating that, yes, we are seeing it color outside the lines, but it's only referring back to here. So when this was happening live, and you can watch this on the recording, I'm not concerned about it, tearing off. I'm not worried about that at all. What I'm trying to do is I'm trying to get inside of this range here that's shaded in red, and I'm trying to secure entries above the midpoint or consequent encroachment level. That's what I'm focusing on. And figuring out as soon as I get that, where we're going to trade at next. And that's this first presented fair value gap. Now, because we've done this short-term high, ripped its face off, then it created the model I explained last night. High, higher high, failure, that's turtle soup. The first presented fair value gap that's forming on there, you want to extend that. Well, in this case, we just traded right up to that. So that's going to be an immediate trade. And I want to see it trade back down in the first presented fair value gap. But here's the caveat here. Because we've had multiple stages of buy side taken, this was a lot of manipulation in here, going into a premium array. And then if we return back to the first presented fair value gap, and because I'm bearish and I'm looking for mid gap to come down to these levels here, I want to see the first presented fair value gap offer no resistance on the downside. When you watch the commentary, this is the only thing you saw me put here. I didn't want to, when it got to the low of it, I don't want to see it go up into that area here. No bodies up there at all. None. Zero. and I wanted to see it just rip through. If you watch the video, you'll see me having this low highlighted with this. All I did was took this comment here in this little line that was originally anchored there. Once it ripped through it, like I wanted to, like I wanted to see it do this very thing right here, it did it. Then I immediately took that line and put it down here, so that way you can see that I was wanting this level to give up the ghost quickly. I wanted to see speed below that. And the only mention I made about the inversion aspect of this first presented fair value gap, which is this candlestick, by the way. There's your first presented fair value gap. Because I'm bearish, I'm expecting lower prices. I want to see the gap, the opening range gap, be a factor for drawing price lower. I'm only looking for half gap. So consequent encroachment is where I'm reaching for. I'm teaching my children, I'm teaching my brother-in-law and my best friend to use that as their draw. And don't expect to try to make more than that, but take partials before it gets there too, which is why you watch me do what I did today. So anyway, it just slices right through first presented fair value gap. And now look what it does here. It gives you confirmation at the consequent encroachment right there. Let me see if I can. Okay, this candlestick's wick goes up to there, just above the midpoint, and then gives up the ghost and goes lower and closes outside and below the low of the first presented fair value gap. Then this candle here opens up, trades up to it here. Now, if it would have hit this or went into the lower quadrant level or wick to that, I would have added. That would have been a beautiful entry to add to. It didn't go there. It just stopped short right there. So there's a little space between this candlestick's wick and the low of that orange box, which is my first presented fair value gap. It's going to act as an inversion fair value gap if it can go there. But did it get there? No. So what did I teach you about real order flow? I'm not talking about yesterday's numbers, okay? I don't care about yesterday's weather. You're going to dress appropriately based on yesterday's weather. Through first presented fair value gap, there was no even considering coming back to it here. So that's indicative of what? Heaviness. That means it's really, really bearish. So the note was, I want to see speed under this low, just like I had it here. Well, here's the low. It rips through it. Can't even come back to touch that low. Where's support and resistance at? I'm supposed to be a support and resistance trader, right? It's so fun. I love it. But anyway, it doesn't even get there. So that also is what? An old low that can't even be retested. And then it starts to sell off again. Where's it going to go? Half gap. But now it gets down here and it's been a straight run from my entry candle. Oh, I'm sorry. There you go. Let me put that back up here. There's my entry right there. Look at the top of the range right in here. Look real close, guys. You see that? That's probably lucky. And right there at the consequent encroachment level. So again, I know what I'm looking for. I don't need to know yesterday's numbers. I don't need to know the number of contracts that were bought and sold at a specific price inside of a candlestick. Okay, that is not secret science. It's not the sauce. It's not the secret to figuring out the marketplace. It's not going to be any more precise. In fact, it'll never catch up to mine. This still isn't even my best stuff. This isn't my best stuff. Okay, I'm telling you. Wait until you see how we close this year out. You're going to be like, what in the world? Yeah, that's how it's going to be, just like that. But I wanted to kind of like shock you a little bit, the ones that were in my comment section. It's about a half a dozen of you. And just let you know, I love all of my viewers. I love all of you. And I want you to have an immersive experience here. It's an interactive experience. You give me something, and then I come out and I show you that you're wrong. That's how we're going to roll this year. We're going to do the whole thing. And yes, ribbons, baby. It's coming.